My name is Greg Alderson. The competitor that I chose against the Cheesecake Factory was Buffalo Wild Wings. I did this because they have a similar business atmosphere. The first three categories that I looked at were stock prices, PE ratio, and earnings per share. For this, Buffalo Wild Wings did significantly higher for each of the categories, which shows that the Cheesecake Factory needs to improve in these categories. Although the Cheesecake Factory didn't do that well in those categories, for revenue and net income, they did significantly higher. For sales revenue, they did over $1.5 billion for the past 3 years, whereas Buffalo Wild Wings did under $1 billion. For net income, it was also a great deal higher than Buffalo Wild Wings for the Cheesecake Factory. Based on this, I can make a conclusion that the Cheesecake Factory needs to find more investors, especially because their stock prices are a lot lower than the Buffalo Wild Wings. And not only for stock prices, but they need to raise their PE ratio and their earnings per share. So basically that's all they have to do, I would say, is get more investors and just worry about that so that they can grow. And that is it.
Hi, my name is Delson Grove. I'm a junior research analyst. I chose to do Darden Restaurants Incorporated, which includes Olive Garden and Red Lobster. Looking at the stock prices, Cake has actually increased 10.4% in the past year, while Darden hasn't increased that much significantly over the past 6 months. They decreased $5.60. Looking at the earnings per share, Darden actually beats Cake out by a lot, showing that Cake probably needs to give more dividends out to their shareholders. Price earnings ratio, Cake actually keeps up with the industry better than Darden does, 17.6 compared to 18.73. Looking at the sales versus net income, I chose to do profit margin because of the size difference between the revenue and the net income. Cake has shown an increase in growth for their profit margin, and Darden has actually stayed consistently high. Darden is making more profit off their revenue, while Cake has shown more growth capabilities, but it's also slowed down over the past 2 years. In conclusion, we need to increase our earnings per share by giving out dividends, and I know we did that last quarter. In quarter 3, we gave a $6.4 million dividend, and we need to generate more net income off our sales compared to Darden, and open new stores, generate more revenue because of the limited expansion capabilities of current restaurants. And that's it. Thank you for your time.
My name is Shake Dowling, junior analyst for Cheesecake Company, and I chose to do my presentation against Ruth's Hospitality Group, as they're both restaurants in the upscale dining industry. Summary is that Cake outperforms Ruth in all categories of these key indices in absolute numbers, except they are comparable to the Ruth in percentages. Looking at revenue, they generate 4.72 times greater revenue than Ruth over the past 3 years, 9.7% growth since 2009 compared to Ruth's 8.7%. For net income, as you can see by the graph, they're generating a lot more net income, 123% growth since 2009, but Ruth it shows us 708.1%. That's because they had a loss in 2009 of impairment, which is not occurring. Without it, it would have been 88.3. Earnings per share and PE ratio, because their net income is higher, the earnings per share is significantly higher than Ruth's, even with about 50,000 more shares. And the PE ratio also shows a higher 17.9 against Ruth's 12.74. Their stock price, though it's increased higher than Ruth's, the percentage it's increased lower, up 10% versus Ruth's 20%. The previous indicators I discussed should show that since all the other comparisons are about the same, the stock should be the same, but based on other factors, we don't know why it would be not growing as fast. So in conclusion, Ruth's higher than in absolute numbers and everything else, but should expect, based on the percentages, that their stock price should be growing about the same, but it's not. Thank you.
My name is Colleen Coaches-Fahani, and I am a junior analyst here at the Cheesecake Factory. Looking at the Cheesecake Factory's numbers, we're doing comparatively well to Ruby Tuesday. You can see that our current stock price is at 2014, and our revenue was pretty high, and our PE ratio is 17.70. And then our earnings per share are 1.91. And then compared to Ruby Tuesday, the numbers are pretty low. They're actually not doing very well at all. I'm not sure how they're still in business. That's just something, you know, to kind of consider. Yeah, so I think we should just continue using our CRM system to see how customers are really interacting with our business, and we should continue to increase our growth and have our sales improved. Thank you for your time.
Good morning. My name is Brian Goodyear, and I'll be presenting the competitive position of the Cheesecake Factory compared to BJ's restaurants. According to WikiInvest, BJ's is described as a high-end casual dining restaurant with 130 locations, compared to the Cheesecake Factory that is described as an upscale casual dining restaurant with 162 locations, which makes it a good competitor to compare against. For stock prices, you've seen a 10% increase for the Cheesecake Factory since the past year, as opposed to BJ's restaurant, which has decreased nearly 37%. So you can see the growth from these two charts. It shows the growth for the past year. For the PE ratio, BJ's restaurants had it's nearly 150% more than the Cheesecake Factory, which makes it a relatively risky stock to invest in. The two competitors are very different in size as far as revenue and net income. However, the Cheesecake Factory has consistently kept about 3 times higher than the smaller company, which shows that even as a larger company, the growth is still being sustained. And in conclusion, Cheesecake Factory has good financial growth, is a secure investment, and has continued to have growth over the past year, as you see by the third quarter numbers.
Alright, so my name is Troy Bennett. I'm a junior analyst on Cake's Financial. What and why? It's a presentation on Cake's financial statements. I'm comparing these statements to another company to determine Cake's performance in the industry. So for this, I did it against Ruth Chris Steakhouse. As you can see, Cheesecake Factory is substantially better. Stock prices over the last 3 years, Cake is growing throughout the year as Ruth Chris. I mean, the numbers really aren't even that comparable. So with the revenue, Cake has grown significantly compared to Ruth Chris Steakhouse. I've used Ruth Chris Steakhouse because, one, they're expensive. I know Cheesecake Factory is also expensive. They're upscale, they're decorative, they're fancy. Price to earnings ratio, Cake is 17.62, Ruth's 15.84. As of right now, we're a healthy company and we are not overvalued. The net income, again, Cake is growing dramatically as compared to Ruth's Chris. And the EPS, earnings per share, Cake is $1.99, Ruth's Chris is $0.63. Leaves us in a good place to have a reasonable shares price. And as I just did Cake versus the industry in general, as you can see, Cake versus the industry is very well. Issues in a nutshell, issues after investigating some issues or some complaints. Prices are too high. Employees are kind of upset, but in a nutshell, with customer service, if we can have managers just like walk around, check how everyone's meal is doing, and maybe reconsider price deductions on the food. Again, happy customers means more profit. So, and that's just addressing the issue what I just said. And in conclusion, with an upscale, again, happy customers means more revenue. So, thank you.
Against Cheesecake Factory and Applebee's. This report will go over how Cheesecake Factory and Applebee's stand together against each other. And Mr. Overton, this presentation is important to you because it will show how we stand among our competition, how we can make improvements to be better. Fact This Cheesecake Factory was founded in 1972, has 170 casual dining restaurants in 35 states with 32,000 employees. And Applebee's has more restaurants in more countries with just about the same employees. And was recently bought by the IHOP franchise. The breakdown between Applebee's and Cheesecake Factory. Cheesecake Factory revenue has been increasing over the last 3 years, as well as their stock increase, which has a 56% increase, and our price earning ratio is 17.7. As Applebee's total revenue has been all over the place, and net income has increased over the years, and their stock prices as well. In the future, I see our companies continue to grow. We can go to more restaurants, have better employees, and products that we're sending out to our customers so they continue to be happy. Our stock price I plan that our stock price will increase to $34 by the end of 2013. And that is it.
My name is E.T. Latova, and I'm a financial analyst for Cheesecake Factory, and I'm going to compare the financial position versus our leading competitor. The competitor that I chose was Brinker International Incorporated. It's a company that owns many chains of Chili's Grill and Bar and Magino's Little Italy. And their stock ticker is E. So comparing their historical stock prices, as you can see, E is the red one. You see they're going up, and they do decline in 2012. They come down a little bit, while our cake stock ticker is going up, and it's gradually continuing to move. The revenues of cake and E are shown on the screen over here. You see E has a huge decline in 2011 and drops down, while ours, I'm only using the 2012 quarter 1, quarter 2, and quarter 3, and you see ours comes down a little bit, but that's only including our 3 quarters of this year. The net income, we need to improve our net income. As you can see, we did drop a little bit in 2012, while our competitors have increased theirs. Our EPS, earnings per share, is $1.92, and our price earning ratio is $17.62, and Eats is $2.03 for the earnings per share, and their price earning ratio is 16.75. This shows that our investors are more confident in investing with us because they're willing to pay $17.62 for every $1 of earnings that we make.
My name is Marco Johnson. I'm here today to do a comparative analysis against P.F. Chang's, one of our competitors, as well as against the industry. Taking a quick look at revenue, our revenue is steadily increasing, and through the third quarter of 2012, it is projected to surpass the 2011 numbers. Compared to P.F. Chang's, our revenue is greater than theirs each year, and they do have more locations than us, so that's always a good thing. Our product earnings is higher than the industry standard, meaning that as a whole, our company is in a good standing. Net income is nearly double that of P.F. Chang's for the respective years. And our earnings per share, the actual was 1.64 for 2011, and for 2012 it was projected to have been 1.9. So that's always going to have a projected increase. Stocks throughout the past year have grown 10%, I should say. So overall, I think we're in a decent standing. We just need to keep everything up. And thank you for your time.
I did mine on Darden Restaurants Incorporated. My name is Doug Klopper. If you look at the stock price for the past year, we went from $29 to over $33 now. And Darden is a little bit bigger. Darden is a little bit bigger of a company, so their stocks are a little bit higher. But as you can see on the chart, we have been steadily increasing over the past year. Our revenue is only $1.82 billion as of now, and Darden is a little bit bigger, so I mean they are going to have more revenue than us. The net income though, over the past 3 years, we've had a 53% gain, where Darden Restaurants has only had 16% gain over the past 3 years. Our earnings per share has went from $1.47 $1.47 to $1.90 over the past year, where Darden has only went up 26 cents over the past year. And the PE ratio has actually went down for us over the past year, where Darden's has pretty much stayed the same in the past year.
Courtney Boyer, and this is a comparative financial analysis of the Cheesecake Factory and Darden Restaurants, Inc. So here we have stock prices and intraday highs and lows. It can be seen that Darden's numbers are higher than Cake's, meaning they are a more valuable company and a desirable part to be for investors. And then we have price per earnings. The price per earnings shows that if you have a large number, that the companies have large shares of profits and relatively good stocks. And it can be seen again that Darden's numbers are higher than the Cheesecake Factory's. And then next we have revenue, EPS, and net income. The higher the EPS, the better chance of profitability that company has for the future. And it can be seen that Darden's numbers are again higher than the Cheesecake Factory's, in addition to revenue and net income. And if those numbers are higher, that means that the companies are bringing in more money and performing better overall. So the Cheesecake Factory needs to act now because the Darden Restaurants, Inc. has a competitive advantage compared to it. So the Cheesecake Factory needs to learn from their company profile and the target market overall to better position themselves in the market and other competitors. Thank you.
And Karika, been asked to compare Cheesecake Factory with one of its competitors. I chose PF Chang's, Chinese Bistro, PFCB, on the stock market. I jumped right in with stock analysis. Stock prices have been, they're represented dark blue, so sorry for Cheesecake Factory. They've remained competitive historically until roughly July of 2012. PF Chang spiked to 52, it hovers around there today. And Cheesecake Factory is 32. Annually it's grown over time now. PE analysis revealed that investors expect that PF Chang's will grow quicker in the future, yet earnings per share are higher at 1.92 as opposed to PF Chang's 1.52, and that's even in light of Cheesecake Factory's additional issuance of 20 million shares of common stock. Financial analysis revealed that revenues are consistently higher than PF Chang's, and Cheesecake Factory, more interestingly, has almost double net income, which is disproportionate to their increases in revenue, which proves that they're managed more efficiently and they are able to better manage their assets. All of my information was garnered from their SEC filings. They're available online. I have them with me in my notes if anyone has any questions.
My name is Tatiana Dragan, and I would like to present to you comparative financial analysis of Cheesecake Factory and Panera Bread Corporation. While Cheesecake Factory has continuously grown over the last 3 years, their financial analysis showed that the company is losing its market position compared to Panera Bread Corporation, one of its biggest competitors in the industry. The gap between the two companies becoming even wider today, that can be seen from the charts. Cheesecake Factory's revenue as well as net income is growing, has increased over the last 3 years, yet Panera Bread has time and again outperformed Panera Bread Corporation. Net income is growing faster than revenue, and it indicates increasing profitability for both companies. Stock prices gone up for Cake and Panera Bread Corporation. Earnings per share that represents company's profitability has substantially grown for Panera Bread Corporation and Cheesecake Factories, yet Panera reported much better results.
price earning ratio analysis that usually that usually represents investors' expectation about company's future on the market. Panera's bread ratio is much higher than Cheesecake Factory's, yet for both companies ratio continuously goes down. Comparison analysis of both companies show that Panera Bread Corporation presented much better results than Cake, yet stable growth for Cheesecake Factories Incorporation sets high expectation for investors and good prospects for the future.
Good morning, my name is Julie Bell. I am the junior analyst for the Cheesecake Factory. I have been assigned to research our competitor and create a comparative financial analysis. I want to begin by alerting you to a serious issue. We're doing far better than our competitors. You might think you heard me wrong, so I'm going to say it again. We're doing far better than our competitor, Ruby Tuesday. I believe that this is one of our greatest disadvantages. These results have been compiled from Yahoo's recent stock estimates, as well as from the Cheesecake Factory and Ruby Tuesday's past income statements. It is clear that from these results, the Cheesecake Factory is doing far better than Ruby Tuesday, which I believe can cause us to become complacent. This graph compares the revenue of the two companies. You can see clearly that the Cheesecake Factory is far better off. And then this graph also compares their net income statements. You can see that the net income statement of Ruby Tuesdays has increased in the past few years significantly. I think that this should make us uncomfortable. My hope is that this motivates us to not be content with what has been accomplished, but to strive to accomplish even more. That was all I had. Thank you.
Here, the economy has shown signs of improvement. But how does the Cheesecake Factory fare over this past year? My name is Jessica Evnick, and I'm a junior analyst here at the Cheesecake Factory. And I have gathered the information of 5 financial key factors and compared them to industry leader Darden Restaurants Incorporated. Here we have the stock prices over the past year for both companies, with the closing price from Friday being labeled as well as 6 months prior and a year before. Here we can see that Darden has a significantly higher stock price, but they aren't as reliable of a performer in the market, and we have shown steady increase over the past year. Here we have the other 4 key financial factors, which include revenue and net income, which are cumulative amounts over the past 3 years. And if you do some quick math, you can see that we produce a quarter less than what Darden does, but it has to be taken into consideration that they own and operate over 2,000 locations, and for every 12 Darden restaurant, there is 1 Cheesecake Factory. So they have 12 times the amount of stores we do, but we're only operating at a quarter less. Also, with a high PE ratio, it's true that it's a risky investment, but it also means that analysts find that there is a good future for our performance. Thank you for your time.
Hi, my name is Shira Feldstein, and I'm going to do a comparative analysis between the Cheesecake Factory and the McDonald's Corporation. They're both similar. One's a little bit higher end than the other, but they have similar items on their menu. If you look at the price-earnings ratio between the two companies, they're both very similar. One's $17.40, one's $17.49. But the fiscal year earnings per share is very different. One Cheesecake Factory is $1.90, while the McDonald's Corporation is $5.79. Now, if you look at the revenue between the last 3 years between the companies, you see that the Cheesecake Factory fluctuates, between going up and down, while the McDonald's Corporation's revenue keeps rising. But if you look at the net income between the companies, the Cheesecake Factory keeps rising, while McDonald's Corporation fluctuates. And now that information is from ycharts.com and marketwatch.com. Now, if you look at the stock prices from the last year, you see that there is some connection between the two companies. When the Cheesecake Factory stock price tends to be up, the McDonald's Corporation stock is down. When McDonald's stock price is up, the Cheesecake Factory stock is down. we can conclude from there that when times are better financially, people will opt to dine at higher-end restaurants such as the Cheesecake Factory. When times aren't as good financially, people will opt towards lower-end restaurants such as McDonald's Corporation and other fast food restaurants. So, yeah, that's that. Thank you.
Good morning, my name is Larissa Gutowski, and as requested, I have the comparative analysis for you today. So what I decided to do was I decided to take Brinker International. So it's quite a bit larger than our company, and I thought that was a really, really good thing to do to show the fact that we are doing amazing. So this Brinker International, which is like Chili's and the Italian company, they have over 1,500 restaurants, and we only have 171. So, as you can see, so Cake is Cheesecake Factory and Eat is Brinker International, and like the stock prices of like the year and 6 months and the intraday, even the P ratio and the EPS are all really, really similar. So the fact that we're doing that well compared to such a large restaurant is really, really awesome. So I have right here, I have the revenue. As you can see, for Brinker International, when they first, like in 2009, they were making a large, large sum, and their revenue has continued to decline, whereas ours is going up. And then also net income, their revenue is, I mean, their income is rising, but so is ours, and we're catching up to them very quickly. So basically, I just wanted to say that we are really, really doing a great job, and that's it. Thank you.
Analyst, my name is Michael Happs. This is Cake versus CPK, which is California Pizza Kitchen. Basically, Cake stock price as of 2/1/13 is $33.80. Well, the 1 year is $30.22, and the 6 months is $33.21. CPK stock price as of 2/1/13 was $18.51, which basically shows that Cake is doing a lot better. Cake revenue and net income, the revenue is in billions, so in 2011 it was 1.757 billion. It just shows net income versus revenue. Cake is doing a lot better. CPK revenue actually had net income of negative 406,000 in 2011. The Cake ratio and EPS, PE ratio is 18.61%, and the EPS is 1.47. CPK ratio and EPS, the PE ratio was actually negative 613.96%, and the EPS was 0.03. That's it.
Hello, my name is Christian Hofer, and I'm a junior analyst for the Cheesecake Factory. And today I'm going to give you a comparative financial analysis between the Cheesecake Factory and Darden's Restaurants. Darden Restaurants is the world's largest casual dining operator with over 2,000 restaurants in the US, and it is including Olive Garden, Red Lobster, and Bahama Breeze, for example. If we look at the stock prices, both of them rose over the last year. The Cheesecake Factory rose in year 2012 by almost 10%, while Darden only rose by 0.74%. Both companies doing very well in sales and net income. Both have a steadily growth over the last couple of years, while Darden Restaurants is a much bigger company. They, of course, have larger numbers than what we have. If you compare the PE ratio, you see that the Cheesecake Factory has a larger PE ratio. Thus, investors think that we are growing more in the future, and the earnings per share is higher at Darden because of their bigger net income. That's it.
And I will be doing a comparative analysis of the Cheesecake Factory and Red Robin's Gourmet Burgers. First of all, for the stock price, we have for 6 month, 1 year, and for the current today. For Red Robin, it increases as well as, well, the Cheesecake Factory starts at 33, drops down to 31, then goes back up to 33. Secondly, for the sales and revenue, for 2009 through 2011, Red Robin is steadily increasing, as well as the Cheesecake Factory, except for the Cheesecake Factory is doing it at much higher numbers. For the price over earnings ratio, Red Robin is sitting at 22.03, while the Cheesecake Factory is at 17.50. Fourthly, for net income for 2009 through 2011, Red Robin has a drastic drop in 2010, yet the Cheesecake Factory increases from $76,463 through $95,720. And lastly, for the earnings per share, for Red Robin it's at 1.48, while Cheesecake Factory is at 1.38. And that is all. Thank you.
Okay, so good afternoon. My name is Marquise Bailey. I'm a junior analysis at Cheesecake Factory. And today I'll be doing a comparative financial analysis on our company and Darden Restaurants Incorporated. Now, I know everybody's had a long day today, so I'll make this pretty brief. So first, let's talk about why I chose this company. Well, Darden Company is made up of 6 subsidiary companies, restaurants, including Red Lobster, Olive Garden, and Longhorn. I chose the company because we have, similar pricing, and the atmosphere is pretty the same as well. The points that I'll be covering today are stock prices, quick ratio, PE ratio, net income, and earnings per share. Okay, so for our company, the stock price in September 1st, 2011, was $24.56. As of March 1st, 2012, our company's stock price was $29.28. Now, it's a $5 increase, around $5 if you understand. And as of February 3rd, 2013, our company increased to $33.80. Now,
15 more seconds. Go. You have 15 more seconds. Go.
A quick ratio. Oh man, a quick ratio is better, 5 times better. PE ratio is better. Thank you.
Good.
Alright, hello everybody. My name is Chris Chapman, and today I'll be doing a financial analysis between the Cheesecake Factory and Cracker Barrel. I chose competition Cracker Barrel because I actually worked there at one point this time last year, so I wanted to see how they're doing against the Cheesecake Factory. And on this, it kind of breaks down what I'm talking about: stock price, sales, earnings per share, PE ratio, and net income. As for Cheesecake Factory, in the year, it was $29.76, and 6 months later it was $33.89, and it kind of had a little drop off to $33. Whereas Cracker Barrel, it kind of started to go up for stock price, starting at $52, and by a year later, as of the 29th of January, it was at $64. The sales for Cheesecake Factory had a steadily increase, and as far as Cracker Barrel, it was kind of like unstable. Earnings per share, significantly, Cracker Barrel's earnings per share were much higher than Cake's, roughly about $3, almost $4 difference. The PE ratio for Cheesecake Factory was 17.4 compared to Cracker Barrel's 14.97. And the Cheesecake Factory's net income, tremendous increase from $12.9 million to almost $96 million. And Cracker Barrel's steadily, not really consistent, between $85 million, $85.3 million, and to $85.2, and then by 2012. All right.
Thank you.
My name is Roberto DeMari. I'm the junior analysis for Cheesecake Factory. Today I wanted to go ahead and compare Cheesecake Factory versus Texas Roadhouse. They're similar in the same ways because they're family-oriented atmosphere, pretty large portions if you've gone to the places that you've eaten there, and they are a full-service dining experience. So that means that they, have you sit down, they bring you drinks and all your food. Advantages Cheesecake Factory has over Texas Roadhouse is that they have more food selection, higher end dining. They also have a focus on profit on desserts, because desserts have a higher profit in the restaurant industry, and they generate more sales than Texas Roadhouse. The disadvantages are it's less affordable, so people tend to go to Texas Roadhouse more. Also, they have too long of a menu, which is the general consensus among a lot of customers. Some people like it, some people find it too much. Texas Roadhouse also has 345 restaurants, where Cheesecake Factory only has 170. This is Cheesecake's financials. Our revenue, which is found up here, is at, this is in the billions, 1.6 billion. And also our net income is down there, so all that in between is operations. Texas Roadhouse is just underneath. They end up at 1.11. And yep, that's our market growth. Thank you very much.
Alright, everyone, my name is Milton Hernandez. I'm here to talk about Cheesecake Factory and comparing it with McDonald's Corporation. I chose McDonald's because according to CNN Money, it's the #1 admired company in the industry that we're in. This is the revenue from Cake and MCD. I apologize. In the past 3 years, we've increased our revenue by 13.8%. As we see, McDonald's has increased theirs by 18.9%. This is our net income here. McDonald's, obviously in the billions, they're a larger corporation than we are, larger company. We're still in our millions here, but as we've both progressed. This is the stock prices from last year, taken from a few months. This is ours here on the left, McDonald's here on the right. Our EPS diluted is 164 for us and 527 for McDonald's. Our PE ratio is a little bit better than McDonald's. It's 17.3. There's a 17.8. So the promise is our investors a little bit more. There's a little bit more promise for our investors, and that's the end.
You good?
Hello, my name is Diana Lott. I am the junior analyst for the Cheesecake Factory. I'm going to be comparing the Cheesecake Factory to Bob Evans today. I chose Bob Evans because they are a sit-down restaurant just like the Cheesecake Factory. They're not a fast food restaurant, which is what a lot of the publicly shared companies are in the restaurant industry. First, we're going to look at the revenue today. As you can see, Bob Evans goes up every year since 2010, and Bob Evans actually goes down every year. As far as net income goes, again, Bob Evans actually goes down and then goes back up, so they're a little unstable, whereas the Cheesecake Factory goes up every year. And when it comes to stock prices, the PE ratio, the EPS, and shares outstanding, you will see that Bob Evans is actually higher than the Cheesecake Factory. But what I've come to conclude at the end is that that is because the amount of shares outstanding is actually higher for the Cheesecake Factory. So it actually brings everything down a little bit. Thank you.
Thank you.
Good?
Yep.
Good afternoon, everyone. My name is Zachary Bussey. I'm a junior analyst for the Cheesecake Factory. Today I prepared a shocking analysis showing how the Cheesecake Factory dominates Ruby Tuesdays in several financial aspects. To start, the Cheesecake Factory has a lower total revenue than Ruby Tuesdays. However, their total net income is much higher than Ruby Tuesdays, showing that they're much more efficient with their expenses. Next, we look at stock price over the past year. Investors are going to be much more likely to invest stock into the Cheesecake Factory because they have a much higher and increasing stock price at around $33 compared to Ruby Tuesday's stock price, which has decreased from 7 to 6 and back to 7. And finally, we look at the price-earning ratio compared to earning per share. The Cheesecake Factory has a very fair price-earning ratio and earning per share, while Ruby Tuesday's price earning ratio is considered undefined because they have a negative earnings per share. I chose to compare the Cheesecake Factory to Ruby Tuesday's because they're both casual dining restaurants with similar target audiences. Here are my sources. My data was retrieved from Yahoo Finance. And thank you guys for your time. I hope this was helpful.
Hi, my name is Ward D'Souza. I'm a junior analyst at Cheesecake Factory. Today we have decided to do a comparative analysis in financials with Ruby Tuesday. The reason why I selected this is because just like any other restaurant, it is a benchmark and they somewhat provide a similar service, which is more on the higher end side. And just by looking at the stock price on intraday, Cheesecake Factory is about $33, Ruby Tuesday is about 1/3. When you look at the moment of the stock price, there's not that much difference except for about $3 at the most. The reason is because these shares are not traded that aggressively with, and they're more into investments. When you look at the sales revenue, clearly Cheesecake Factory is higher than Ruby Tuesday. The reason is because the revenue they make is on the sale of the final service, which is much higher than Ruby Tuesday would, and that's part of the reasons, which does not necessarily mean profitability. And the price to earning ratio of Cheesecake is 17, which means it's really good investment for now. And the net income is also really good. As you can clearly see, it's doing very well in the market in terms of finance and business. Thank you.
Hello, Mr. Overton and ladies and gentlemen of the board. Before I get started, I would like to say good day to you all. Thanks for being here. My name is Mike Elvidge, and I'm a junior analyst for the Cheesecake Factory, and I'm here today to present a financial comparison with our top competitor, Brinker International. Records show that our stock has increased over the past year, about $4 or so. However, over the past 6 months, that has remained relatively stagnant and has decreased slightly. In regards to net income, you see that we have increased in successive years. However, for 2012, numbers are currently unavailable. In regards to revenue, similar to net income, it has increased in successive years. For 2012, this is our current number. This is only through the first 3 quarters, and we are expected to repeat the trend. For Brinker International, you see that stocks are quite similar to ours. However, ours are slightly higher. And net income for them is slightly higher because they are a much larger company. However, Cakes and we need to work on. Their revenue is also higher because they are a larger company similar to net income. And then some conclusions drawn from this report are, despite our relatively small size, we are performing quite well and competing with one of the top casual restaurant companies in the world. We are improving performance across nearly all categories in successive years, and in my opinion, improvement is needed in regards to net income. All numbers are provided by Standard & Poor's Net Advantage. Thank you all for being here.
Thanks.
Stop.
How do you stop it?
Yeah.
You press the same button.
Okay.
My name is Michael Glass, and I'm a junior analyst for the Cheesecake Factory. I've been tasked with conducting a comparative analysis of the Cheesecake Factory with a competitor. And I'm supposed to use the 5 main criteria of stock price, net income, revenue, earnings per share, and price per earning ratio. And here are the Cheesecake Factory's numbers. As you can see, the numbers look good, except it appears that the net income and the sales are going down. But that's not the case because that's just the first 3 quarters of 2012. The last quarter should be released around February 20th. The number I'd like to point out that I like a lot is the price per earnings ratio, which is a 17.79, which is well above the average. A high price per earnings ratio means investors expect the increased future economic growth in the company. So that's a good number. The competitor I chose was Ruby Tuesdays. Both are family restaurants, serve a variety of different foods. Ruby Tuesdays also has good numbers, except you can see in 2012 their net income has gone down. There are several reasons for that I read, and that caused their earnings per share to also go down. And I can't get a clear price per earnings ratio with a negative earnings per share. So clearly, Cheesecake Factory is the more reliable company, and it's only growing each year. That's it. Thank you.
I'm Leah Berlin, and I am a junior analyst here at the Cheesecake Factory. Today I'm going to be comparing the Cheesecake Factory to one of our competitors, Panera Bread. It's kind of like a similar company serving bakery-style dishes, and also it was started around the same time in the late 70s, early 80s. Compare stock prices. The stock price for Panera Bread is obviously much higher. It's about 5 times the size. On a positive note, the stock price for the Cheesecake Factory is increasing at a better rate, 9% versus Panera Bread, 6%. Earnings per share is much lower for Cheesecake Factory than Panera Bread, which means if a potential investor is looking at both companies, they probably would want to invest in Panera Bread over our company. Here are some other data. Revenue for Cheesecake Factory was higher in 2010 than Panera Bread, but then they caught up and their revenue is higher than ours now. And if we look at the net income, our net income was lower even though our sales were higher in 2010, which means that our expenses are probably a lot more. So I think that's what we have to do. That's what we have to take out of this meeting. We have to cut our expenses in order to compete with our competition. Here is a list of our works cited. I got most of my information from income statements, from Yahoo Finance, and from the Cheesecake Factory's official website. Thank you.
Hi everyone, my name is Emily Bernard, and I'm going to be doing a comparative analysis between Cheesecake Factory and Chipotle. So first, I wanted to start by giving you kind of a visual representation of the two companies' net incomes for the past 3 years. 2012 is only through Q3. And you can kind of tell Chipotle's blue. It more than doubles Cheesecake Factory's net incomes for the past 3 years. On the bottom, you can see all financial information was found from eTrade.com. Next, more than that, we also were surpassed by Chipotle Mexican Grill in revenue by a minimum of $140.6 million each year for the past 3 years. The price-earnings ratio was also significantly larger for Chipotle, which means that those investors will expect higher earnings growth in the future than our investors would. And lastly, their earnings per share was 8.6 compared to ours, which was 1.9, and this kind of means that their shareholders will attribute more of their earnings for each share of stock that they own. So in conclusion, it kind of seems like we are being outperformed a little bit by Chipotle Mexican Grill, and these are my works cited. Thank you.
Davidson, I'm here at junior analysis here at Cheesecake Factory, and as my slide says, we are more than just cheesecake. And to compare that, I chose Ruby Tuesdays as our comparison. And as you can see in pretty much all the graphs, we pretty much outperform. One key thing to notice is that our PE ratio is 17.28% higher than Ruby Tuesdays. And that's just because our investors expect a higher return and our company to grow. As well as our earnings per share, they expect to earn $1.92 for everything you expect, whereas if you invest in Ruby Tuesdays, you're losing money. So nobody will do that. Also, just to point out the sales, you can see that we absolutely dominated Ruby Tuesdays, and especially since Ruby Tuesdays is actually in the negative this last year, 2011. Also, one other thing to compare is our stock prices have been relatively high, and I say we got a pretty good thing going, and keep it that way.
Here to give the examination between Cheesecake Factory and Ruby Tuesdays to see where we stand in the market. Looking at the financials, the first thing that stood out to me was the stock price, which we actually are valued at over 5 times Ruby Tuesdays. And our stock prices has consistently went up. We actually gained almost $4 this year, our stock price. And the earnings per share, Cheesecake Factory, we actually have $1.91 compared to Ruby Tuesdays, who is actually the negative. And in conclusion, the Cheesecake Factory, we remain pretty stable compared to the volatility of Ruby Tuesdays over the past 2 years. And this chart shows examples of that. And overall, I think we're managing the company a lot better than Ruby Tuesdays is. Thank you. And are there any questions?
Hi everyone. I'm Winsley. I'm junior analyst in the Cheesecake Factory our company today. So I will do a short analysis about the position of our company in the restaurant industry. The good side, in 3 years, our company do a good thing. The revenue increasing every year, but the stock price also increasing. But are we doing good enough? So a big one competitor for us is Printer International. Why? First thing, because they are working in the restaurant industry. The second thing is they are similar in capital with us, 2.5 billion for it, and 1.8 billion for our company. They have same stock price. They are close competitor for us. After 3 years, even they are decreasing a lot, but like they are still doing better than us. They are make more than 1 billion revenue for us in each year. The stock price was increasing twice our price, so the financial also recommend to buy or hold their stock, but like sell or but don't hold the stock when they have churn. So I mean we are doing good, but we are doing well, but not good enough. We need to new plan, new products to change this situation. Okay, thank you for listening.
Hello everyone, my name is Kyle Jefferson. I'm a junior analyst for the Cheesecake Factory. I'm here to tell you about how the Cheesecake Factory is headed in the right direction. I have done research on the Cheesecake Factory, and Ruby Tuesday is one of our leading competitors in the restaurant market. And from my research, I found that I used the Cheesecake Factory website, which is cheesecakefactory.com, and rubytuesday.com. And I found that our stock price is at $33.14 as of January 29, 2013, and Ruby Tuesdays is $7.62, which is ours is significantly higher. I've also found that our revenue and net income has been steadily increasing over the past 3 years, while Ruby Tuesdays has been steadily decreasing over the past 3 years. Our price earnings ratio is higher than Ruby Tuesdays, which ours is at 20.22, and Ruby Tuesdays is 18.29. Our earnings per share is at $1.70 per share, while Ruby Tuesdays is at negative 22 cents per share, which ours is significantly higher. In conclusion, our investors are willing to invest in our company because we will give them more profit, and we are making the steps in the right direction. Thank you.
Good afternoon, everyone. I'm Mariah Acap, the junior analyst at Cheesecake Factory, and I'm here today to present a comparative analysis of Cheesecake Factory versus BJ's Restaurants Incorporated. And the reason why BJ's is an important competitor to pay attention to is because even though they're a new company, they've shown dramatic growth within our industry, and they will soon be a top competitor for us. As you can see, in the side-by-side comparison, we are clearly the more dominant company. We are in the maturity stage of growth and not the growth stage. BJ's is in their growth stage, but what we really need to pay attention to, our main concern is the 2010 to 2011 revenue and net income growth that BJ's has had. They've had a significantly higher growth in those two areas than we have, but that's given since they're in the growth stage. But if they are able to sustain such high growth, then they will surely become a threat to us. So I urge you to consider addressing this issue by becoming proactive, maybe becoming more competitive in our industry instead of reactive when we have an issue with this competitor. So with that being said, thank you and have a great day.
My name is Steve Lagrado, and I'm a junior analyst here at Cheesecake Factory. I'm going to be comparing our company to Brinker Incorporated. As you can see, both stock prices are pretty similar. Ours has grown 9.4% from January of last year, while Brinker's has increased 8.6%. Both our and our competitors' price-to-earnings ratio and earnings per share are very similar. These are the revenues and net incomes that I got from Yahoo Finance. These numbers are in thousands. While our revenues are much lower, we've increased 5.6% in the past 3 years, while Brinker has decreased 1.3%. Our net income is much lower too, but both companies have increased for the past 3 years, and Cheesecake Factory is expected to increase again in 2012. Thank you.
Hello, I'm Jessica Reskin, and I'm a junior analyst at Cheesecake Factory. And today I'm starting a comparative analysis of Cheesecake Factory and DineEquity. DineEquity is actually the company behind Applebee's and IHOP. And I started today with the stock prices over the past year. We are in red, and then DineEquity is in blue. As you can see, we were steadily increasing until about October, and then we leveled off around $33, while DineEquity actually hit a real low in July, but then dramatically increased until they hit about 74. Then their earnings per share are about a little bit higher than ours at $7.17, while ours are at about $1.92. But our sales revenue has exceeded theirs every year for the last 3 years, including the first 3 quarters of 2012. And then our net income also was higher in the last 3 years. In fact, in 2010, when theirs was at a negative, ours had just doubled from the previous year. Our price per earnings ratio has been significantly higher, showing that investors actually expect more growth than our earnings. So overall, we're doing okay. Our stock prices are a little bit lower, but our net income and sales and price earnings ratios are exceeding.
Hello, how are you doing today? My name is Marcus Thatcher. I'm a junior analyst with the Cheesecake Factory organization. As a junior analyst, the question can be asked, how are we doing and what can we do to expand in the future? The purpose of this analysis is to compare our data with a rival company that is Red Robin. Over the last year, their stock price has been higher than ours, which means that investors are willing to trade at a higher price for a piece of their share. Our revenue and net income is actually higher than theirs, which means we're bringing in more money and we're more profitable than they are over the last 3 years. Earnings per share is the profit. Price to earnings ratio is the investment. Earnings per share is the profit received for shares. We obviously have more because we're more profitable right now and our net income is higher. The price to earnings ratio is the amount investors are willing to pay per company dollar for their earnings. Red Robin's is higher, and this is significant because not only are investors willing to pay more, but they're also willing to trade more as well. In the future, the goal is expansion. What I want to do is change our target market, and we could learn from Red Robin and learn that we can focus on kids and expand geographically as well. The information in this slide came from NASDAQ.com and theCheesecakeFactory.com. Thank you for your time.
How you doing? My name is Tyron James. Today I was delegated to compare competitors analysis and pick Ruby Tuesdays because we have equivalent like dishes. It's in the category as casual dining. Let me just get into the numbers. Okay. Well, as you can see, it's color coordinated, so blue, gray is Ruby Tuesdays, and sales, it looks like both of the companies are increasing in sales. We got a little more increase. Our PE ratio is $17.62, emphasizing that our company will have more, we will grow more likely than Ruby Tuesdays. We both had an increase in the net income, but 2011 they had a net loss, and emphasizing that they lost money and the shareholders most of the time probably didn't get paid dividends, cash dividends, or they lost money in the earnings per share. They had a negative earnings per share, 22%, emphasizing that the stockholder lost 22 cents of every share that they invested in. While on the other side, we had a positive earnings per share of $1.64, $1.64, so they earned $1.64 for every share that investors own. And the year-to-date prices, our stock prices, a little higher. Pretty much in conclusion, we're still doing good. We're doing a little better than the Ruby Tuesdays, and most of our investors are earning positive profits of their dollars per share.
My name is Ryan Irby. I'm a junior analysis for the Cheesecake Factory. I'm here to report pretty positive news from what I've seen on websites like CNN Money and the Cheesecake Factory website. A couple numbers I want to go over is the growth we've seen the past 3 years. 44% of the stock price has gone up. The past year, 8.4%, and even in the past 6 months, 1.5%. I compare this to Darden restaurants. They go over Olive Garden, Red Lobster, Longhorn. They have a couple other smaller franchises as well. They also increased within 3 years, but in the past year and 6 months, they've gone down. Today, Cheesecake Factory, as well as Darden, has also gone down a little bit. We've shown continued growth from 2009 to 2011, as well as Darden has, but our revenue is over 4 times higher as far as a percentage. Our PE ratio also has increased. Again, we compare really well against them currently and over the test of time. Our net income is 2.24 times the amount as it was in 2009. Compared to Darden, they have only at 1.28. And our earnings per share also grew. So what I'm suggesting is Cheesecake Factory has expanded over the test of time despite the competitors kind of stalling. Higher averages in our major categories, and we should continue to pursue, even though Darden's a larger company, their revenues. Thank you.
So my name is Eric Fouts, and I am a junior analyst for the Cheesecake Factory, and I would like to compare our company to McDonald's. And I believe McDonald's is a good choice because they're such a successful company, and I think many companies should look at their results. Okay, so let's take a look at revenue and net income. Okay, so obviously McDonald's net revenue is higher. However, they have gone up in slight increments, while the Cheesecake Factory has gone up by a lot more. And so for the net income, which is our revenue minus our expenses, as you can see, McDonald's is again higher than the Cheesecake Factory, but we've made some big jumps. We've almost made twice the amount from 2009 to 2010, and McDonald's has only gone up by, again, slight amounts. Okay, so stock price. You see here we have intraday high, intraday low, and for the year we have what the high was and the low was. And again, McDonald's is higher, but they are a very successful company. Okay, so for the earnings per share, which is for every share we have in earnings, and again, Cheesecake Factory is $1.64, and then you have McDonald's, and then for the price-earnings ratio, they're both close. That's one area. And that's about it.
Good morning, everyone. My name is Pooja Patel. I'm a junior analyst of Cheesecake Factory. I'm going to compare Cheesecake Factory in cooperation with Darden Restaurant, that is well known and has 2,000 restaurants all over the United States, while that Cheesecake Factory has around 162 restaurants all over the United States. Both the companies have done good financially in past 3 years, but if you see the stock price, they have like quietly increasing, and according to Cheesecake Factory and Darden Restaurant, Cheesecake Factory has done better compared to Darden Restaurant in stock price, while same with the PE ratio, Cheesecake Factory has done better compared to Darden Restaurant, while Darden Restaurant has done better on net income, earnings per share and revenue compared to Cheesecake Factory. In short, like both the companies are doing well compared to each other, but Darden Restaurant has more financial standing compared to Cheesecake Factory, as it has more restaurants compared to Cheesecake Factory, so definitely he's going to make more profit. So in short, like Cheesecake Factory needs to grow his business to get the height of Darden Restaurant.
Company to Blooming Brands, which is Outback Steakhouse, Carrabba's, Bonefish, Fleming's, and Roy's. Clicker.
No.
Thank you. So as you can see, our stock prices have been increasing with slight downfalls, but compared to Blooming Brands, they've been increasing, but at a smaller or at a lower price. Compared to the Cheesecake Factory's net income is continuously increasing and our total revenue is continuously increasing. We are at a close of our stock price at $33.14 with $1.92 for earnings per share, but we do only have 151 restaurants, which compared to Blooming Brands is not a lot. They have 1,400 restaurants, but their earning per share is only 56 cents. And they're also in the negative for net income for their most recent quarter. But their total revenue is much higher than ours because they have a lot more stores than we do. So for us to compete with them against their revenue, we would need to expand. Our price per earning ratio is at 20.22, but as you can see, our estimates for the future are going down to 13.48. But compared to Blooming Brands, where theirs is at 1979, which is lower than ours, their 2014 estimates is still higher than ours. Thank you.
Hello everyone, my name is Bridget Gardner and I'm a junior analyst for Cheesecake Factory. Today I'm going to be comparing our business to Red Robin Gourmet Burgers Inc. I'm comparing our business because they are a competitor. We are both in the top 3 favorite casual food restaurants. And the objective for today, as I said, the comparative analysis between Cheesecake Factory and Red Robin Gourmet Burgers. And I wanted to determine our position in the market compared to Red Robin. I want to answer the questions how Cheesecake, our financial position in relation to this competitor, and what does that mean for the Cheesecake Factory. As you can see, Red Robin does have a higher PE ratio, and they do have a higher EPS. However, a good EPS ratio is 17 to 25, so we are doing well. However, I did research that we have decreased our PE ratio from last year to this year. We went from 18.82 to 17.79, and Red Robin actually increased from 19.51 to 22.28. So that's something we couldn't improve on. Our stock prices are also lower for 1 year and intraday. However, we are increasing or maintaining, whereas Red Robin has been sporadic. They decreased from 1 year to 6 months, and then they went back up again. Our revenues are extremely higher. As you can see, that those numbers are in thousands, whereas Red Robin is in millions, and it's a lot higher. As well as net income, we are a lot higher. And I also researched the new numbers, which we are also doing very well in comparison to Red Robin. And overall, you can see that Cheesecake is in better position than Red Robin. And thank you for your time.
My name is Austin Musgrove. I'm a junior analyst here at the Cheesecake Factory. We're going to do a comparative analysis between Cheesecake Factory and Brinker International. Revenue. In In all 3 consecutive years, we've increased our revenue. In 2009, we had a 4% increase, and in 2010, we had a 6% increase in growth. Brinker International had negative increases both all years. Net income. Both companies increased their net income over the 3 years. Cheesecake Factory had substantially larger increases in growth. The PE ratio, Cheesecake Factory was slightly higher, but both companies were below the industry standard of 20.8. The EPS, both companies were again very similar. Cheesecake Factory was slightly higher, which indicates a greater chance of future profitability. The stock prices over the last year increased for both companies. Brinker International increased slightly more, and recently on February 1st surpassed the price of Cheesecake Factory. In conclusion, Cheesecake Factory has a stronger market standing than Brinker International. Operational excellence has directly related to our success. Operations should continue as normal, and we should focus on fixing inefficiencies.
Mr. David, fellow board members, how are you doing today? My name is Hisham Mohammed. I'm a junior analyst at the Cheesecake Company. I'm here to do a comparison between us and our biggest competitor. Why do we care? Obviously, we all want to be that person on the top. We want to see how we're doing ranking against each other. So we're trying to improve that way or maintain our position or whatever we want to do. Obviously, I'm doing everything for the obvious reason of similarity between us. All those right there for you. Okay, first before we go any further, they're a bigger company than us. They do have 2,000 restaurants. We are much smaller, so the absolute numbers do not matter as much. But we have been increasing our revenue. Actually, they had a little decrease right there in 2010. For income, we're all positive, but for us, it was 200% increase from 2009 to 2011. So we are doing much better. We are definitely going faster than we are. For the stock prices, they are higher, but we have more balanced stock prices during the year. They were fluctuating up and down all year. And then also for the EPS, they were higher, but it's understandable. And for the PE, we're actually higher than them. So that means we're probably having a more positive outlook on the future. People are interested in investing with us a little bit. Yeah, it's good, but there's definitely a lot of more improvement. We can try working on our customer service a little bit more, our food, all that kind of stuff. Thank you.
Did a comparative analysis between Cheesecake Factory and Darden Restaurants, and I'm Nate Johnston. Let's look at our stock prices. Darden Restaurant kind of bottoms out and pretty much equals the same as it did last year. And the Cheesecake Factory, they increased slightly, but not terribly too much. The revenue, obviously Darden Restaurants is a much bigger company. They make 4.26 times the amount that Cheesecake Factory makes, so it's kind of hard to compare it between the revenue. The net income, Darden Restaurants increased a little bit more than Cheesecake Factory did, just because they own so much more companies and branches and stuff. Our EPS, Cheesecake Factory is 1.92, which means shareholders actually they make $1.92 for every share they sell, and Darden Restaurants makes more. Our PE ratio, shareholders are actually more willing to buy the $17.36 for $1 of current earnings for Cheesecake Factory than they are for Darden Restaurants, and that's my presentation.
I'm Kyle Paul. I'm a junior analyst for Cheesecake Factory, and today I'm going to be comparing them to Cracker Barrel Incorporated. As you can see, this is the past year. Our stocks are the blue and theirs are the green. They kind of fluctuate at the same rate, although theirs are higher because they're a bigger company than we are. This is within a given day, February 5th, 2013. Like I said, they fluctuate at the same rate, and even within a given day, they kind of do the same thing as well. As far as revenue goes, they make more than we do. You can see the numbers there in millions, but like I said, they're a bigger company, so what can you do? Absolute numbers like
someone said before about their company are not exactly true to the whole story. Our PE ratio is higher than theirs is. What does this mean? Cracker Barrel stockholders are willing to pay. Cracker Barrel stockholders pay less than ours, so ours are willing to pay more than they are for one share of stock, so that's a good thing for us. Net income, Cracker Barrel makes more than we do, but what can we do about that? Cheesecake Factory, our EPS is 1.92 and Cracker Barrel's is 4.34. What does this mean? Cracker Barrel shareholders make about $2.40 more than our shareholders for every share of outstanding stock, but what can we do? Well, we can't change the stock market, that's up to the open market itself. So our solution would be higher earnings, so either lower maybe discretionary spending or increase our number of stores. And those are my switches. Thank you.
I'm Kyle Vance. I'm a junior analyst for Cheesecake Financial. I compare them to Texas Roadhouse. This is the first slide right here, just showing the some numbers, stock prices, a little bit higher than Texas Roadhouse, which shows right there the 1 year, 6 month intraday. Every year we've seemed to just about increase. Revenue, we're a little bit bigger of a company than Texas Roadhouse itself, so overall we're showing steady increases every single year, gaining money in the billions actually in revenue. Net income is that's a huge gain from 2009 to 2010, nearly double, and like I said, once again, still increasing a lot more. Texas Roadhouse also increasing, but got more money. Price to earnings ratio, a little bit lower than Texas Roadhouse, but 17.49 is still a pretty solid amount. Earnings per share is at 1.92, which is a very good amount as well, I have. Overall, in conclusion, Cheesecake Factory is a stable company compared to the competition and to the market as a whole. And just having small little improvements across the company to be able to help continue revenue growth throughout the company.
Welcome today. I am a junior analyst for Cheesecake Factory. My name is Evan Yelenich. I will be showing you a comparative analysis with Darwin Restaurants. As you can see, Darden owns 8 different brands, including Red Lobster, which has about over 2,000 locations, and Olive Garden, which has 1,200 locations. I chose Darden because we share a value in quality service and atmosphere. As you can see, our stock prices are a little bit lower than theirs, but we have increased gradually throughout the year. And with our P ratio, it's almost a little over $4 higher than theirs, which higher P ratio, meaning higher earnings growth, better for investors, better for our company as well. As you can see, our revenue and net income is a little bit lower than theirs, but we're projected to hit over $1.8 billion this fiscal year, as well as over $100 million in net income. Darden brings about an average of $1 billion per brand in revenue and about $60 million per brand in average income. And I believe if we have more locations, we'd be able to have bigger or increased revenue and increased income, which is better for us and better for investors as well. And thank you for being here, and I'm Evan Yelenich.
Thomas, I'm junior analyst for Cake, which is Cheesecake Factory, and I'm evaluating Darden, which is their stock ticker. I picked Darden because they're in the immediate vicinity of Bahama Breeze. Cheesecake Factory is known for our cheesecake, and Darden is known for things like Red Lobster biscuits. Okay, these are our stock prices. This is Cheesecake Factory, and that's Darden. Intraday, 6 month, 1 year. Over the last year, we've been increasing steadily. It's only been about $3, but Darden has been dropping. Actually, they've dropped about $5. Revenue, Darden is a much bigger company than we are, but their revenue has been decreasing over the past actually it's been slightly increasing over the past 3 years. We've kind of stayed the same. We've increased, but not that much. Our PE ratio was 17.44. We're higher than Darden by about $4. This means that investors are more willing to invest with us, and our company is poised to grow. For net income, Darden is a much bigger company than ours, so of course they're making more net income than we are. But percentage-wise, we've just about doubled, and they've only gone up about 15% roughly. All right, and our earnings per share are 170, and Darden's is 357. Their higher earnings per share is due to the fact that their revenues and net income are much higher. So based on the size of the company, we're doing well for the market. The only thing we can do to improve is basically put out more restaurants and expand, because based on our financial data, we're only going up. So we're doing everything right.
Hey everyone, I'm John Witt. I'm a junior analyst for Cheesecake Factory. I do want to note that everything that was taken from this presentation was found on the NASDAQ company and the company investor sites where they release their financial information. First, I want to compare it to the Bloomin' Brands, which does own Outback, Carrabba's, Fish, and Roy's. We do have a current higher stock, and we have increased at a 10% margin in the past year compared to the BLMN, which has only, they did not release a statement last year, but they did only improve 50%. Revenues and sales, since they are a bigger company, they do have more restaurants, more locations. They do make a higher revenue, but we do somehow make a larger net income compared to their larger companies and services. For the EPS and PE ratio, we do make a $1.92 earnings per share, which gives us a PE ratio of 17.71, and their current listed EPS was only 16 cents, but they did not list a PE ratio. And the overall status is we are financially more stable than the BLMN because we have a higher EPS, a higher net income, and we do perform better than its competitors.
We're ready for Ryan.
Hello, I'm a junior analyst for the Cheesecake Factory. My name is Ryan Seward. Let's look at our stock price. We are in the blue, and I compared to Texas Roadhouse, which is in the red. The reason I compared them to is because our restaurants we have 151 restaurants compared to Texas Roadhouse, which has just over 300 over 40 states. As you can see, our stock price is higher in all three indicators. And if you take a look at the revenue, it's all in thousands. Texas Roadhouse, once again, on the red, and the cake in blue. We're also higher. And if you look at the PE ratio, ours is 17.73 compared to Texas Roadhouse is 18.08, which really isn't that much higher. And if you take a look at our earnings per share, we are at 1.92, so therefore we have about roughly $1 over each share compared to Texas Roadhouse. This indicates that our investors are more inclined to invest in our company over Texas Roadhouse, even though they have more restaurants. And I believe that's it. Thank you.
Hello everyone, my name is Imad Pilpile. I'm a junior analyst at Cheesecake. I've been assigned to a comparative financial analysis with Chipotle. What we are looking at is Chipotle has a higher stock price compared to Cheesecake Factory. However, they are highly volatile. Cake has a relatively reasonable stock price, which is reasonable and attractive to small investors. Because Chipotle has a higher net income and a higher stock price, we can see that they have a higher earnings per share and PE ratio. During the last financial crisis, both companies have been steadily increasing their revenue and net income. However, Chipotle has a higher net income because they have been doing a good job in sustaining their expenses. One thing I would like our managers to do is convert most of our revenues into net income by decreasing our profit, decreasing our expenses. We do have fewer locations than Chipotle, and we do have similar revenue compared to Chipotle. So our next fiscal year strategy should be to cut down expenses and increase our net income by providing value to our shareholders. Thank you.
I'm a junior analyst for Cheesecake Factory, and I've been asked to determine Cheesecake financial situation versus a comparing company. And I choose Brinker International because Brinker International is one of the biggest, largest casual dining restaurants company in this business, with over 1,500 restaurants and 100,000 employees. At first,
Why is it not working for us today?
At first I want to take a look at the Cheesecake stock price situation, which is good. How you can see, we increased and developed our, over the last 12 months, and our shareholders are facing a capital gain, which is very important for us. Here's a little illustration which shows the development, and I take another look at our some financial facts like PE ratio and earnings per share. They're pretty much even, which is good, like, because Brinker International is a way larger company than we are, so the net income and the revenue is a little bit higher than ours, but it's still on track. So overall, I think our capital gain is there, and we have a good approach for the future. Thanks.
Good afternoon, my name is Meredith Walter. I am the junior analyst for the Cheesecake Factory, and I'm here to present my results of a recent comparative financial analysis I did between the Cheesecake Factory and its leading competitor. But fear not, for I bring you good tidings of great joy. The Cheesecake Factory is out-competing its competitor P.F. Chang's China Bistro. If we can grab our attention towards the revenue comparison chart behind me, which the numbers were taken from both companies' annual reports, we can see that both companies had a pretty steady increase between their revenue, and this is pretty much because both companies have a similar location. However, if we look at the net income comparison, we can see that this is where both companies start to diverge financially. The Cheesecake Factory steadily increases, while the P.F. Chang steadily decreases. This is basically because of the Cheesecake Factory's unique characteristics, their wide range of menu products, and also its unique dining services. So if we continue to have unique characteristics and strategize on our locations, we should continue this trend. Thank you.
Junior analyst for the Cheesecake Factory. I recently did a report on their current financial position in the market. In order to do this, I needed a reference point, and I used one of their top competitors, AFC Enterprises, who is a company that develops, operates, and franchises Popeyes. These are just the general numbers for Cheesecake Factory's financial situation. The current stock price is 33.8, which has increased slightly over the past 6 months. The total revenues is 1.75 billion, and the total net income is 95.72 million. Price earnings ratio is 16.9, and the earnings per share is 1.88. For their top competitor, current stock price is a bit lower, 29.18. Total revenue is 1.53 billion, and the total net income is 24.2. Earnings per share is 89 cents, and the price earnings ratio is 20.22. Just a quick analysis of this. The stock price was higher for the Cheesecake Factory, but hasn't increased as much. Thank you.
I still have seconds.
Hasn't increased as much. Total revenues are higher, net income is, thank you.
Hi, my name is Nisha Shah, and I'm a junior financial analyst for the Cheesecake Factory, and I'm comparing Cheesecake Factory to Darden restaurants. Cheesecake has approximately 150 dining restaurants, which includes Cheesecake and Grand Lux Cafe, while Darden has an amazing 2,000 dining restaurants, which includes restaurants like Olive Garden, Bama Breeze, and Red Lobster. As we can see here, the stock prices have stayed relatively the same over the past year, but Darden does have approximately a $20 lead over Cheesecake. Darden has a higher EPS ratio than the Cheesecake Factory, while Cheesecake has a higher PE ratio than Darden. The net income and revenue for the past 4 years for Cheesecake and Darden has increased
gradually. But Darden does have a huge lead over Cheesecake, but we have to keep in mind that Darden does have many more restaurants than Cheesecake. Thank you.
My name is Justin Rothman. I'm a junior analyst here at the Cheesecake Factory, and I've been asked to do a comparative analysis within the current volatile market between us and DineEquity. DineEquity is a leading competitor which owns IHOP and Applebee's as well. For those who are new to the company, we now operate under the ticker symbol CAKE, which is publicly traded on NASDAQ. We've been in operation since 1992, and we started at $2.63 and have moved up to just about $34. On this slide, I just wanted to bring your attention to the revenue. In recent years, since 2009, we have increased our restaurants, and as a direct relationship, our revenue has increased as well, and we have had a 5.9% increase from 2010 to 2011. Right here, as you can see, we're very close with DineEquity in most of the stats, but in revenue and net income, we'll check in the next page. Net income has been increasingly, as I said before. DineEquity had a slight decrease in 2010, but unlike us, we stayed steady throughout the whole time. Where can we go? Assets have been increasing, our liabilities have been decreasing, which is a good thing. We are currently at $34, as I said before, but if we continue our marketing plan, we should be able to rise in the near future.
Ready?
Yes.
Okay. My name is Tom Zumway. I'm a junior analyst for Cheesecake Factory. I was asked to do a comparative analysis with the Cheesecake Factory and another competitor. I chose the Texas Roadhouse because they're kind of similar in locations. Stock price were higher than they are. Our EPS is a little bit higher, and the price earnings ratio were a little bit lower, but pretty much similar. Here we take a look at our revenue, both steadily increasing, but a little bit larger than Texas Roadhouse. But the biggest one was in 2009, we were lower in the net income than Texas Roadhouse, but now we're much higher, and probably because we decreased our liabilities and got better on our restaurant service. That's it.
Okay, hello, my name is Nicole Sagnano. I am a junior analyst for the Cheesecake Factory. For my comparative analysis, I chose to use Red Robin because they're very similar in the way that they serve. They design their restaurants. They have about the same amount of restaurants throughout 35 to 40 states in the United States. And the decoration and their interior are very similar and consistent, so they're very recognizable. Here you'll see how the two companies compare to each other. The revenue and sales for the Cheesecake Factory is much higher. It is also growing at a consistent rate. Same with their net income, while Red Robin's gourmet burgers are kind of fluctuating and they dip, especially in 2010. But you can see that Red Robin does have a great growth rate, so they are expected to continue, which makes it a great competition to use to analyze our financial records and to keep track. Our earnings per share are higher, but they are about the same level, so it is important to keep an eye on it. Thank you.
And I did a comparative financial analysis between the Cheesecake Factory and Red Robin. This chart represents the revenues of each company over the past 3 years, so that's from 2009 to 2011. The Cheesecake Factory has acquired almost double the revenue of Red Robin since 2009. Right, and this chart represents the net income for the two different companies. The Cheesecake Factory's net income has increased by 123% since 2009, while Red Robin's has only increased by 17%. The stock price for the Cheesecake Factory has increased by $11 in the last month, or in the last year and 6 months, while Red Robin's has only increased by $3. And the price earnings ratio and the earnings per share are pretty similar for the two different companies. Red Robin's price earnings ratio is 23% higher than the Cheesecake Factory's, while the Cheesecake Factory's earnings per share is 14% higher than Red Robin's. And I received all my information for this presentation from NASDAQ.
Thanks, Matt. I'm Justin, and I'm junior analyst for Cheesecake Factory, and I'm going to compare to Chick-fil-A today. Alright, let's talk about the revenue. For revenue, as you can see, the AAA growing rate is a lot higher than Cheesecake Factory. And as for the EPS, AAA is still higher than Cheesecake Factory as well. And let's get to the second point. And for net income, even though AAA is a lot higher in net income than the Cheesecake Factory, but Cheesecake Factory net income increased in a higher rate than the Cheesecake Factory. And Cheesecake Factory increased by 123% over the past 3 years. And as for Chipotle, they increased by 71%. And as for the PE ratio, the Cheesecake Factory is lower than the Chipotle. Chipotle have a 36.1 PE ratio. Thank you.
How you doing, everybody? My name is Derek DeMacy. I'm a junior analysis analyst here at the Cheesecake Factory. And today I'll be doing comparative financial analysis between our company, the Cheesecake Factory, and Applebee's, who's owned by a mother company called DineEquity. Here's a quick overlook of the stock comparison between the two companies. Cheesecake Factory stock is slightly lower than Applebee's, which is accurate because we have fewer stores and fewer restaurants than them. And both companies have seen an increase in stock price over the past year, which is a good upward trend for a financial analysis. Here's the sales from the past 3 years for both companies, which has also been increasing, a steady increase. The earnings ratio is slightly higher for Cheesecake Factory than Applebee's, and net income once again is consistently going forward and upward as time goes on. The earnings per share for Cheesecake Factory is slightly under 2, while for Applebee's it's slightly over 7. Here's a quick 1-year comparison between the two companies that shows both have had an upward trend and good outlook for the future. And a quick overview of my results is we're a pretty stable company, and thanks.
Everyone, my name is Matthew Hanley. I'm a junior analyst here at Cheesecake Factory. I have compared the business statistics of Cheesecake Factory to Texas Roadhouse. That is their stock symbol there. This is just an overview of the volume of shares traded over the past year. In red is Texas Roadhouse, and in blue is Cheesecake Factory. While Texas Roadhouse sold more shares earlier on, as their stock decreased in value, people started trading less and less with them. This is just an overview of the stock prices compared. The 1 year is obviously higher for Cheesecake Factory, and it steadily increases. Same with Texas Roadhouse, but they're relatively similar in growth trends. And, Cheesecake Factory, the revenue and the PE ratio are also pretty similar. Revenue is slightly higher for Cheesecake Factory than Texas Roadhouse, but the biggest thing that I found in my analysis is the net income. Cheesecake Factory more than doubled over the past 3 years, while Texas Roadhouse has only gained about 33% or so. Also, the earnings per share is slightly higher for Cheesecake Factory than Texas Roadhouse.
Hi, I'm Tim Saunders, and I'm a junior analyst here at the Cheesecake Factory. I've been asked to do a comparative analysis between the Cheesecake Factory and one of its biggest competitors, so I chose to look at the financial reports of Red Robin. As you can see here, around a year ago, Cheesecake Factory and Red Robin were about the same point on the stock market, with their stocks valued about the same amount. But over the last year, Red Robin has seen a bigger increase than Cheesecake Factory. While this might seem to be a small problem at first glance, I don't think it actually is a major problem, because as you'll see on the next slide, our revenue is much higher than Red Robin. And while with some other cases that might be due to us having more restaurants, Red Robin actually has over twice as many restaurant locations as Cheesecake Factory, so having that much more revenue, it's a pretty good sign for us and moving forward in the future. Our net income is also increasing at a pretty substantial rate, while Red Robin is kind of hovering right around the same amount over the last couple of years. So that's a good sign pointing towards the future, and if we continue this trend, we'll be doing a lot better than them in the long run as well as now. As for the PE ratio and the EPS, we're sitting at about the same spot with Red Robin slightly higher in the PE ratio, but we're a little bit higher in the EPS, so that kind of evens out, and we're both doing pretty well in that area. So thanks for your time.
Okay. Hi, my name is Chad Shields. I'm a junior analyst for the Cheesecake Factory, and I'll be doing a comparative financial analysis with one of the competitors in the casual dining sector. That's Ruby Tuesday. As you can see here, our stock price is very well off in comparison to Ruby Tuesday. Ruby Tuesday had a very tough year, and they posted a negative PE ratio as well as a negative EPS. So I also included a forward PE ratio, which is an estimate based on according to NASDAQ.com of their PE ratio a year from now, and it's very promising. So they're still they're still competitive, or they will be competitive. Comparing the revenue here is kind of misleading. If you go back to 2009 and further, their revenues were higher. So as you go into 2000, they decrease. Cheesecake Factory has shown steady increases going back to 2009. As far as net income, we've been able to steadily increase our net income in comparison to Ruby Tuesday, who has seen their net income fall to a negative for the most recent full year. And that's my financial analysis. I'd like to thank you all for your time.
Hello, my name is Kevin Major. I'm a junior analyst for the Cheesecake Factory, and this is my Cheesecake Factory evaluation. I chose to compare the Cheesecake Factory to Red Robin Gourmet Burgers because they're both family-oriented dining restaurants that offer a lot of items on their menu. As you can see, over the past 3 years, both of these companies have the same kind of trend for revenue. The Cheesecake Factory went from $1.65 billion to $1.822 billion, and Red Robin went from $841 million to $914.8 million. Both have pretty high price-earning ratios. Cheesecake Factory has 17.55 and Red Robin has 21.92, so they're expecting earning growth here in the future. Net income, the trend for Cheesecake Factory is pretty similar to the trend of the revenue. They went from $42.8 million all the way up to $95.7 million over the past 3 years. And Red Robin actually didn't have quite the same trend. They went from 17.6 million down to 7.3 million, and then back up to 20.5 million. The stock price, both of them were pretty, they both increased, and Red Robin was more drastic increase as they went from 20.65 to 37.43. Cheesecake Factory was still pretty steady increase. They went from 29.49 to 33.19. I got my sources from Yahoo Finance, and that's it.
Thank you, Kevin.
Right? Okay. Hi. My name is Sam Mohammed, and I'm a junior analyst for Cheesecake Factory. Today I will be comparing Baker International, which owns 3 restaurants, Chili's, Maggiano's, and Macaroni Grill. We'll start out by looking at the net income. As you can see, they operate at a higher level, but they're pretty steady. There's the numbers, and we'll look at the earnings per share, 2.03 to Cake, which is 1.91, and the PE ratio is 16.62 to 17.53. And the revenue, as you can see, again I said they operate at a higher level, but compared to Cheesecake Factory, they're actually their revenue is going down instead of going up. And stock prices, they're very similar. Their 1 year is 27.12 to 30.58. 6 months is 33.15 to 33.38, and their current is 33.14 to 33.17. And this is where I got my work site.
Thank you.
Good. Alright, hello. I'm Derek Sovin. I'm a junior analyst here at the Cheesecake Factory. Today I'm doing a comparison analysis.
I'm doing my comparison analysis on BJ's Brewhouse. It is said to be by NASDAQ.com to be one of our toughest competitors. Also, they share a lot of the same qualities that we do. Like, for instance, they started with a brew, an alcoholic beverage. We started with a cheesecake, and we made a franchise off of one product. And also, we have a very similar dining experience. As you can see here are our stock price numbers. We are right now trading slightly over $30 per share, while they are slightly right behind us. Which is quite interesting, is the stock price for BJ's was trading over $50 a share just over a year ago. Why it's declining, I do not know, but what brings the question, why haven't we traded at such a high stock price? Here's our EPS. We're trading just under $2, while BJ's Brewhouse is just slightly over $1. Our revenues, we were just under 3.5 million, while BJ's is only operating just over $1 million. Why we care about this is right now we're expanding to the Middle East, and while we're doing that, I think it's really important for us to make sure we take care of everything we need at home, where most of our franchises are held, so when we expand, we don't lose anything in any revenue. Thank you very much.
Clement Gifford, and I'm a junior analyst for Cake. And in today's comparison, we're going to be looking at Chipotle versus Cheesecake Factory. And I chose Chipotle because it's one of the growing trends in restaurants, and they're both casual dining restaurants. As you can see, Chipotle is a relatively new company. They began in 1993 and became publicly traded in 2006. Chipotle is in blue, and you can see their stocks are trading, their sales are relatively higher compared. Their sales are higher compared to Cake, even though they had a dip.
Keep going, you got it.
And when it comes to the net income,
Chloe, would you mind stopping?
I'm a junior analyst for Cake, and in this comparison, we're going to be doing Chipotle and Cake. Chipotle is a relatively new company, which is why I chose them in our market. And
Feel free to take a minute. Sorry.
Okay, hello, I'm Dana Ruskowski. I'm a junior analyst for Cheesecake Factory, and I'm here to show a financial comparison between Red Robin and Cheesecake Factory. I chose Red Robin because they're both famous for one certain item, and they both have about the same dining experience. So if you can look at our stock prices, for the 1 year and intraday, Cheesecake Factory is above Red Robin for both of them, but at our 6th month here, we dropped down to 29.88, while Red Robin rises to 33.48. For our sales and revenue, I did it for 3 years, 2009 through 2011, and for us, we have a higher sales than Red Robin for all 3 years. The price-earning ratio, Red Robin's is higher than ours with 21.90, while Cheesecake Factory is at 17.73. For our net income, I did for 3 years, 2009 through 2011, and all 3 years we are higher than Red Robin, and each year we progressively get more net income. Finally, the earnings per share, we have a higher earnings per share than Red Robin. We have 1.92, while Red Robin has 1.66. And I got my information from Yahoo Finance.
And I'm a junior analyst for Cake. I'm a junior analyst for Cake, and I'm doing a comparative analysis between Chipotle and Cake. And chose Chipotle because they're both casual dining restaurants, and Chipotle is a relatively new company which has found a lot of success. So it was good to, as a standard, to see how we're doing compared to them. As you can see, they began in 1993 and started trading in 2006, so they are relatively new. And from their sales, you can see that they're all doing relatively well. And even though Cake is lower than Chipotle, it's not that big of a differential. In the net income, there's a big differential between Cake and Chipotle, even though all companies are increasing from year to year. The earnings per share, Chipotle is almost 3 times that of Cake. And in the stock prices, once again, Chipotle is doing a lot better than Cake. And Cake is leveling off instead of increasing compared to Chipotle. In the PE ratio, Chipotle once again is better than Cake, even though both companies are not doing so bad. I got my information from Morningstar and Yahoo Finance.
My name is Seema Punjabi, and I decided to do
my analysis with Cheesecake and Bob Evans, and I'm a junior analyst with Cheesecake Factory. I got the financial strength that includes stock price, revenues, net income, earning per share, and revenue and net income is an average of 3 years for both the companies, for Bob Evans and the Cheesecake. And I got a little bit of background information for the Cheesecake Factory to help understand what's our mission statement and our vision statement, and also theirs to analyze it deeper. Yes, that's it. Thank you.
And I'm a junior analyst for the Cheesecake Factory. Today I'm going to be comparing the Cheesecake Factory to Darden restaurants. They're very similar in type. They have restaurants that are of the same nature. Here are some of them listed. I think it's very important to keep an eye on the competition so you stay alive in today's economy. So the first point I want to bring to your attention is the EPS and price per earning ratio. Investors usually want a higher earnings per share ratio and a lower price per earnings ratio. And the reason for that is it can show the profitability in a company. It can also show how much investors are willing to pay for stock. So overall, Darden is going to have the advantage in this case because they have the higher EPS and lower price per earnings ratio. Next point I want to bring to your attention is revenue and net income. Net income is extremely important when investors are looking at companies. And the reason for this is the more net income you have over the years, there's a better chance for common stock dividends, which investors are looking for. So in this case, the Cheesecake Factory has a steady increase for both revenue and net income, while for Darden restaurants, the net income stays pretty much the same for 2011 and 12. And the last point I wanted to bring to your attention is the stock prices. Cake has pretty much been consistent over the year, while Darden fluctuated a little bit. And I got my sources from financial.morningstar.com and yahoo.com. Thank you very much.
My name is Cameron Schuler. I'm going to do an analysis on Famous Dave's and Cheesecake Factory. I chose Famous Dave's because, like most Americans, we all love our steak, and there's a big competition between steak and like fancy food, and they both are known for their really well desserts. Because Famous Dave's has a really good brownie sundae, and Cheesecake Factory is known for their cheesecakes. Some of the numbers we can look at: their stock prices. Famous Dave's selling for a lot less, like noticeable difference. Sales are a lot lower, but because Famous Dave's is still a newer restaurant. The ratio, PE ratio is doing alright, a little higher for Cake. Net income, Cheesecake Factory's in the millions, like 95 million, and net income's only 400,000 for Famous Dave's. And the earnings per share ratio is a little higher for Cheesecake than Famous Dave's, but it's because Famous Dave's is a new restaurant. We're going to keep our eye on them because everyone loves their steak. And that's it. I'll have information from IB Finance and their websites.
My name is Johnny Segfoy, and I'm the junior analyst for Cheesecake Factory. Today I'm going to show you, I'm going to do a comparative analysis between our company and DineEquity. DineEquity owns IHOP and Applebee's, and I chose DineEquity because Applebee's and IHOP are very competitive right now, and their financial figures are just as competitive as ours. Here are the stock prices between us and DineEquity. As you can see, their stock prices are very high compared to ours, but we're still putting up more revenue than they do. As you can see, our numbers are higher every year since 2 years ago, I guess 3 years ago. And for net income, again, we have a lot more net income than we do. But as you can see here, 2010 they had a negative net income, which means they actually spent more than they actually generated. As price per earning ratio goes, we have our stocks are valued more by the market because they think we have a high expectation that DineEquity does. Our EPS is lower than DineEquity, which means the market thinks they are more profitable than we are. But bottom line is we're still in a good financial stance, and I got my sources from Yahoo Finance.
Alright, thanks, Tony.
I'm Bingwen and I'm a junior analyst of Cheesecake Factory, and today I'm going to present the financial analysis between the Cheesecake Factory and Red Robin. And first, when you look at an annual summary data of both companies, we can see that the growth rate is sell in both companies, they have increasing. But when we compare the net income and earning per share of the company, we can see that the growth rates in Cheesecake Factory is much more higher compared to the Red Robin. And next is the stock information, and BE ratio in Red Robin is higher than the Cheesecake Factory. And they both stock price of both companies is kind of similar, and they both have the increasing in their net change. And so overall, Cheesecake Factory is getting better in operating a restaurant, but they have to improve more to compete with Red Robin as well as other companies. And here are the sources that I have.
Good morning, everyone. Good afternoon. My name is Angel. I'm a junior analyst of Cheesecake Factory, and I choose McDonald's Corporation to do the financial analysis. The reason I choose McDonald's Factory is McDonald's Corporation is both the two companies have the chain restaurant all over the nation, and both have the fast food business. And we also, by compared to the McDonald's, we also can see the difference to become a worldwide restaurant, just like McDonald's did. And the fourth thing is the stock price. Cheese Factory have an increased trend of stock price through the last year, while the McDonald's stock price going down. And at the end of the nearly 70% difference at the day, January 29th. And the total revenue, although the cake's total revenue went up through the last 3 years, however, still cannot catch on McDonald's. McDonald's still have the 20 billion bigger revenues than the cakes. And on the net income, the cakes double their net income through the last 3 years, and get up to the 1.74% of McDonald's. And both two companies have the similar PE ratio, but McDonald's have 4 points higher EPS than their cakes. And overall, cake stock is worth to invest, but the McDonald's have the more. Okay, so I got the sauce from
Decided to do cheesecake. I'm Nana Pinkra, and I'm a junior analyst for Cheesecake Factory. And I decided to discuss PF Chang and Cheesecake Factory. First, we have the stock price here, and this shows the 6 months, which we averaged $33.62. And over the year, we have we ranged between almost $25 to $35 in our stock price. And PF Chang I decided to do PF Chang because it's one of our top competitors. Here we have net income, which over the past 3 years, we've been increasing. We had a low net income because of slow traffic in our restaurants because of low consumer spending, and the same thing with sales. And our earning per share, 2009 we had 72 cents, $1.39, and 1.71. And that is it.
Hi everybody, I'm Alexandra Sokolowski, and I'm comparing the Cheesecake Factory and Denny's. Throughout my presentation, I'm going to be referring to Cheesecake Factory as cake and Denny's as den. I chose Denny's to compare because it's more of a sit-down restaurant. It's also very popular. As you can see, our price to earnings ratio is a lot higher than Denny's. It's 17.73 and Denny's is 4.74. Our earnings per share is 1.92 and Denny's is 1.111. Our stock price also is much higher than Denny's. As you can see, for 1 year it's 32.47, Denny's is 4.53. 6 months is at 34.28, Denny's is at 4.89, and intraday is at 33.82, and Denny's is at 5.12. Our revenue also is much higher than Denny's. It's about 3 times as much. It's pretty consistent, if you can see, through the previous 3 years. And our net income has been steadily rising, unlike Denny's, which is very unstable and it goes down and up. I got my sources from Yahoo Finance and Y-Charts. Thank you.
Good morning, everyone. My name is Nicole Grainer, and I'm a junior analyst here at the Cheesecake Factory. I'll be comparing Cheesecake Factory and P.F. Chang's today, and I got all my data analysis from Yahoo Finance and our 10K annual report. As you can see, I have stock price, sales revenue, PE ratio, and our net income and EPS for 1 to 3 years. For our stock price, we were dominated by P.F. Chang's by about $10 to $20 a year. You can see they had a higher stock price all 3 years, or for the first year and for 6 months, but for the date of 1/29/2013, we had a higher stock price. We generally had larger sales than P.F. Chang's, and we also had a higher PE ratio. For our net income, we also had a higher amount, and for our EPS, we had also a higher amount, which is good in our case. And thank you for your time.
Okay, good afternoon. My name is Kathy McMahon, and I'm the junior analyst here for the Cheesecake Factory. And today I will be presenting the financial analysis between our company and Buffalo Wild Wings. And the reason why I chose Buffalo Wild Wings is because we both serve and appeal to a diverse guest base across a broad demographic range. And although here at Cheesecake Factory we consider ourselves more upscale, it's interesting to see, to compare with more of a sports bar, since our prices are about the same. And here for our stock prices, you can see that we are lower than Buffalo Wild Wings. However, when it comes to revenue, we are higher, although our earnings per share are lower. And for our net income, over the past full 3 years, we are higher than Buffalo Wild Wings. And our price-earning ratios, we have actual and then estimates. And I got my information from NASDAQ.com. And that is all.
I'm Alice Demikas. I'm a junior analyst with the Cheesecake Factory, and today I'm comparing the Cheesecake Factory with P.F. Chang's. They're similar in that they're both higher end, and they are typically located right next to each other. So people either come in through our doors or theirs. P.F. Chang's typically has a much higher stock price all throughout. Their price per earnings has a higher ratio, as well as their EPS. I did 2 different charts to represent their sales revenue. Again, P.F. Chang's tends to dominate Cheesecake Factory. And then this is with the net income over the last 5 years. Cheesecake Factory depreciates and then rises again, and then P.F. Chang's does a similar one, but they're currently lower.
Jennifer G, and I'm a junior analyst at the Cheesecake Factory, and I'm here to do a competitive analysis for Cheesecake Factory and Darden Restaurant. The earnings per share of Cheesecake Factory is much lower than that of Darden Restaurants, and that shows that, and this could potentially bring down investor interest. I mean, investors won't want to invest in our company because of our low earnings per share. And our PE ratio shows a greater 17.90 compared to that of Darden Restaurants. It just shows that that in the nearest future that investors believe that we could, experience higher growth in our company. The stock price shows that Cheesecake Factory has a lower stock pricing than Darden restaurants, and this is as a result of lower EPS. The revenue shows that Cheesecake Factory is increasing at a lower rate than the Darden restaurants. And these are my references. Thank you.
Hello, I'm David Nowakowski. I'm a junior analyst from the Cheesecake Factory, and I'm here to tell you a competitive analysis about our competitors, Buffalo Wild Wings. Looking at the stock prices within the last year, you can tell that we are on the rise, but so is Buffalo Wild Wings. And they have actually grown more rapidly within the past year than us. Moving to total revenue, you can see that we double Buffalo Wild Wings in revenue, but over the past successive years, you can tell that they have brought in more revenue than us. The same with net income. We have about double Buffalo Wild Wings net income. But in 2010 to 2011, we actually brought in a little bit more than them. And hopefully we can keep it up when we get our fourth quarter numbers in for 2012. Now our earnings per share is below that of Buffalo Wild Wings by 0.2. And since this number is an indicator of our profitability, it means that right now we are less profitable than our competitor. And since our EPS is low, naturally that means our PE ratio will be lower than our competitor. And this number suggests that our higher earnings growth in the future for us. But Buffalo Wild Wings seems to be doing a little better than that. And all my financial information was gathered through Yahoo Finance. Thank you.
Good afternoon. My name is Ryan Shiflett, junior analyst for our company, The Cheesecake Factory, and today we will take a look at our relative position in the restaurant market through a comparative analysis with the Texas Roadhouse. First, we can see a direct comparison of the revenues and net income for both respective companies. We can say they both have steadily risen over the past 4 years, and with their final numbers in 2012 look to continue that trend. According to NASDAQ and Yahoo Finance, the Cheesecake Factory stock has increased from $29.43 to $33.16 over the past 12 months, an increase of 12.7%. While on the other hand, Texas Roadhouse's stock has only seen a 4.4% increase, rising from $16.73 to $17.74 in that same time period. While stock prices, revenues, and net earnings have differed significantly between the two companies, the price-earnings ratios for the two are pretty much similar, showing similar incentive for investment in the restaurant market. And in conclusion, the Cheesecake Factory is in relatively good shape, showing recent growth in many areas important to investors, as well as stability and future growth. Thank you.
Good afternoon. I'm Ricky Perry, and I am going to tell you about how we are doing as the Cheesecake Factory. Today we're going to look at the Cheesecake Factory compared to one of its competitors, Red Robin, and what all these results mean. First, we can look at the stock price for January 30th for both companies. They both dropped a little bit that day, but overall, the Cheesecake Factory stock price has climbed over the year. Next, we can look at the net income, and for the net income, ours has gone up over the past 3 years. The third one is not up there. And Red Robin's has went down and then went back up. So they lost money that one year. If you look at our PE ratio, ours is a little bit lower than Red Robin's, and our EPS is a little bit higher. Overall, I feel that we are doing good compared to Red Robin. We're probably about the same as they are,
we might be a little higher. I think that to grow our business, we could reach out to more people and try to reach different customers. And thank you.
All right. Good afternoon. My name is Severia. I'll be talking about the Cheesecake Factory versus Ruby Tuesdays, and I'd like to begin with showing you a couple financial statistics that I researched through Yahoo Finance. All right, so these charts show you a little bit about what has been going on through the past couple 6 months to a year progression of both Cheesecake Factory and Ruby Tuesdays. You can see that the Cheesecake Factory has a bigger net income and bigger revenue in comparison to Ruby Tuesday. The biggest difference I would point out would be the EPS and the price per earning ratio that they both have. The Cheesecake Factory has one that's a little bit, of course, bigger than the other one. It shows the profitability of the company, and therefore I would say that the Cheesecake Factory has a better chance of progressing financially in the future, whereas Ruby Tuesday needs to start working a little bit harder. All right, so that's it. Thank you very much.
Hello everybody, my name is Matt Posner and I'm a junior analyst for the Cheesecake Factory, and I did some research on some financial aspects of our company as well as the Buffalo Wild Wings. The price per share for the companies, we took the prices for the current date as well as 6 months ago and a year, and as you can see, the Cheesecake Factory, we have a lower price per share for our company. However, and Buffalo Wild Wings, it's had a bigger growth throughout the past year with about $6 and change to our $3 and change. So Buffalo Wild Wings has been a little stronger in their price per share. The price per earnings ratio is the ratio where it shows the expected growth of a company. And as you can see, again, Buffalo Wild Wings has been a little stronger in about 50% more than what ours is. So that's, again, something that we need to work on. The earnings per share is also, it's very important for our public, for the consumers that are purchasing stock. Obviously, they want to get a bigger paycheck per share. So what this is showing is that Buffalo Wild Wings, per outstanding share, is making about $1 more than what we are making. The sales and net income is something that we were definitely a little stronger in. As you can see, we've made about $1 billion more in sales in the past 3 years than Buffalo Wild Wings, as well as our net income. We've had a greater profit than Buffalo Wild Wings in the past 3 fiscal years. I did my research on Yahoo Finance and the NASDAQ, as well as the 10K reports from each company. Thank you.
My name is Morgan Tatum, and I'm a junior analyst for the Cheesecake Factory. I did a competitive analysis with Ruby Tuesdays. It's one of our competitors. I chose Ruby Tuesdays because they have similar menu items and prices. And I got all of my data off of the Cheesecake Factory and Ruby Tuesdays websites and Yahoo Finance. Okay. Starting with revenue, you can see our revenue is larger than theirs. It's only for 2012. It's only the first 3 quarters, but with the 4th quarter factored in, you can see that our increasing trend should continue. Not only are we increasing each year, but also at a greater rate than Ruby Tuesdays. Next is net income. We also have a higher net income than them with an increasing rate each year. You can see by 2012, Ruby Tuesdays actually had a net loss where we had a net income. And next, our stock price, not only is it over triple theirs, but in the past year it's also grew by over triple what theirs did grew also. Our EPS is 1.91, and theirs is actually negative because they didn't earn anything per share. Their stockholders are probably not very happy about that. But our price and earnings ratio was 17.67, which is a good number, and theirs was not applicable. Overall, we're doing really well, and we need to keep up the good work. Thanks.
My name is Dan Knoppinger, and I am a junior analyst for the Cheesecake Factory. I'm here to present to you a comparative analysis between the Cheesecake Factory and a close competitor of ours, Red Robin. To start, we're going to look at the stock price from a year ago. We can see that both Cheesecake Factory and Red Robin stock prices have rose over the past year, and that data is as of 1/31/2013, Cake's being 33.16 and Red Robin 36.97. Next, we'll look at the total revenue. All those numbers are in thousands. We can see that from 2010 to 2011, both companies' numbers have rose, and 2012 shows quarters 1 through 3. Quarter 4 will be coming out in February of this year, all of which are showing positive growth. Next, we'll be looking at the net income, again, numbers in thousands. Looking from 2010 to 2011, we do see positive growth again, and through the third quarter, the trend is the same with positive growth, and we can infer that there's going to be a higher net income this year as well. Looking at the PE ratio and the EPS, our PE ratio being a little smaller than Red Robin's, and our EPS being 1.92 and theirs being 1.66, so ours is a little bigger. In conclusion, I can say that the Cheesecake Factory is doing well, but there's always room for improvement. New ideas, new projects will give us the undisputed front runner when investors come to look at both companies. Thank you.
Hi everyone, my name is Tao and I'm a junior analyst from Cheesecake Factory, and today I'm gonna present how our company is doing in business market so far. And I pick Applebee's restaurant as the competing company with our company. First of all, I would like to talk about the annual income statement, and you can see in our company with from 2009 to 2011, its sales as well as the net income keep going up, like after each year, and even though the revenues in 2011 is kind of a little bit dropped down, but it's not really matter to our company. And why the Applebee restaurant, they got a big problem at 2010. They got big depression. Like its sales got from 2009 $890 to $815 and keep going down to $521. And here is stock price information. I got the number from our company, like 1883 for the price earning ratio. For another company at Applebee restaurant got 28. For 3 kind of greater than ours. And the earning per share, we got much higher than Applebee restaurant. And here are references. Yeah. Thank you for listening.
Hi guys, welcome to the company strategy meeting. My name is Shane Vincent. I'm a junior analyst here at Cheesecake Factory. I was given the task of performing a comparative analysis using 5 financial instruments. I decided to choose Ruby Tuesdays because, as everyone knows, they're direct competition of us. The first item I want to look at is stock price. As you guys can see the numbers in the top right corner, but I really want you guys to look at the table. In the blue is the Cheesecake Factory. As you can see, we're growing while the Ruby Tuesdays is declining. Stock price is actually just the company value divided by the number of outstanding shares. And since Ruby Tuesdays and Cheesecake Factory has about the same number of outstanding shares, this is really great. It's a really good number to use. Revenue, which is just all the money that we're bringing in from doing what we do. You can see that we're a lot higher, is expected in 2012 as well. Net income is that number that you just saw, less all the expenses that we incur. As you can see, in 2009, both companies had a loss, but also they're both increasing over the years, ours at a much higher rate. EPS is earnings per share. Ruby Tuesdays is negative. EPS is just a simple number. It's the portion of the earnings the company brings in compared to the number of outstanding shares. As you can see, we're much higher. And the PE ratio is the price per earnings. As you can see, we're higher. Ruby Tuesdays actually comes in at 0 because they have no earnings this year. Thank you.
Hi, my name is Jennifer. I'm a junior analyst from Cheesecake Factory. I'm gonna present about the comparative financial analysis between the Cheesecake Factory versus the Brinker International Restaurant. First, all my research and information I got from the company website and from the NADA. First, I want to talk about the earnings per share. By looking at the number on the table, we can see like both of the company, like the Cheesecake Factory had increased the earnings by average 26% for the past 3 years, while the company, which is Brinker, like had fallen last year to 0.86. So the earnings per share like will like much higher than them. So would be like attract more investors to invest in our company. The earnings per share also affects the stock price. As of yesterday, like February 5th, 2013, the stock price for the Cheesecake Factory were like $34.50, while the Brinker were $33.91. That will also impress the investor to invest more money in our Cheesecake Factory. So next, we want to look at the revenue over the past 3 years for two companies. We also, both companies will increases by the past 3 years, but you can let a global view to the net income. You can see the Cheesecake Factory has like more positive trend to the net income than the Brinker company. So my solution is we should maintain our business reputation and pay more attention to the customer service in order to improve our company. That's it. Thank you.
Lisa Red, I'm a junior analyst for the Cheesecake Factory. I was asked by the CEO, Mr. Overton, to do an analysis on the company performance for the past 3 years using Brinker International, a competitor with the same or similar market cap for my analysis. I used five indices are used to make this analysis. Revenue, net income, and earnings per share were all done on a year-to-year growth rate. As you can see, the revenue was increasing steadily, our net income and our earnings per share are correlated. And net income in 2010 shows a large increase due to the implementation of a cost savings program. Stock price was up for this past year, though it has dropped slightly in the last 6 months. The PE ratio has dropped since 2009, though it is still higher than Brinker International, which gives one to believe that the investor shows a greater opportunity for growth in Cheesecake Factory. And I don't know what to do, and those are my references.
All right, thanks.
Good afternoon. My name is Nicole Nason, and I'm a junior analyst here at Cheesecake Factory. We're meeting here today to go over whether or not the Cheesecake Factory takes the cake. I was asked to complete a comparative financial analysis, and I chose to use P.F. Chang's.
Our clicker made a sudden,
I chose to use P.F. Chang's because they have similar number of locations as well as are considered a full-service upscale dining, and also provide a unique dining experience. Looking at both the revenue and the net income, you'll find that Cheesecake's figures have increased significantly over the past 3 years. Looking at P.F. Chang's figures, they did increase between 2009 to 2010, but decreased from 2010 to 2011. Looking at the earnings per share, which is based upon the number of outstanding shares, Cheesecake Factory offers more earnings per share. Looking at the price-earnings ratio, which is what the market is willing to pay for the company's earnings, and incorporates both the earnings per share and the stock price, you'll see that P.F. Chang's figures are skewed based on the July 2012 stock price, which was due to the purchase price of when P.F. Chang's was sold. If you look over Cheesecake Factory's total stock price over the entire year, you'll notice that it has increased. Therefore, we seem to be both baking and taking the cake. The references that I used were Google and Yahoo Finance, and Street Insider, as well as the financial reports on both P.F. Chang's website and Cheesecake's website.